Datavault AI Inc., trading under the ticker DVLT, closed the most recent trading session at exactly 1.38 USD, down by 0.060 or roughly 4.17% for the day. As of this moment on Saturday, December 13, 2025, the markets are officially closed for the weekend, meaning this 1.38 figure represents the final closing price from Friday's session. While the after-hours markets may have shown slight flickers of movement, the definitive price that every trader is staring at on their screens right now is that 1.38 mark. That red percentage sign, down over 4%, sits there like a warning light, but depending on who you ask, it is either the beginning of a much steeper decline or the absolute perfect entry point for what could be the most bizarre, high-stakes corporate action we have seen in the entire year of 2025. The stock did not just drift lower on low volume, it was pushed down amidst a flurry of confusion, anticipation, and skepticism regarding its upcoming strategic moves. If you are looking at your portfolio this weekend, wondering why a company that just announced a partnership with IBM is trading for less than the price of a cup of coffee, you are asking the exact right question. Most investors look at a stock chart like DVLT's trading under $2, down 4% on a Friday, and they immediately assume the company is in trouble or that the hype cycle has broken. The expectation here is that this is just another AI penny stop that buzzed during the great AI boom and is now deflating as the reality of revenue generation sets in. People expect vague press releases, declining volume, and a slow bleed into irrelevance. That is the expectation. The reality, however, is significantly more complex and, frankly, much stranger. The reality is that Datavault AI is currently orchestrating one of the most unusual corporate maneuvers in recent history, a meme coin dividend linked to the Dream Bowl 2026, set to be distributed on Christmas Eve. You heard that correctly. This is not just a software company. It is a company attempting to blend enterprise-grade data valuation with the viral mechanics of Web3 tokenomics. While the street treats this as a speculative gamble, dragging the price down to 1.38 USD, the underlying technology stack involves deep integration with IBM's WatsonX.ai. This divergence between the meme surface level and the enterprise technical reality is creating a curiosity loop that smart money is trying to figure out right now. Is this a gimmick or is it a new model for shareholder value? Let's break down exactly what happened on Friday to drive this price action. The drop to 1.38 USD was not an isolated incident, but part of a broader sell the news reaction, or perhaps fear of the weird. When a company announces that it is distributing a meme coin as a dividend to shareholders, traditional institutional investors often get spooked. They prefer cash dividends or share buybacks, things they can model in an Excel spreadsheet. They do not know how to value a Dream Bowl 2026 meme coin that will not even begin trading until January 11, 2026. Consequently, we saw a rotation out of the stock by conservative holders, which pressured the price down by that 4.17%. However, if you look at the volume, it remained robust, sitting around 21 million shares. This tells us that for every skeptical seller dumping their shares because they don't understand the crypto dividend, there was a buyer stepping in, likely betting that this digital token distribution could trigger a viral squeeze, similar to what we have seen in the past with companies like GameStop or AMC. The market is effectively wrestling with an identity crisis for DVLT. Is it a serious data infrastructure play, or is it a lottery ticket? This brings us to the broader context of how you might actually trade this. If you are sitting there with your phone open, looking at your accounts, the experience varies wildly depending on your platform. If you are using Robinhood, for instance, the interface makes buying a stock like DVLT feel almost like a game. You see the bright colors, the 1.38 price tag, and the Robinhood stock trading mechanics encourage quick execution. Robinhood investors are often the first to jump on these viral narratives, and I suspect a significant portion of Friday's buy-side volume came from retail traders on the Robinhood app who are excited about the meme coin airdrop. They understand the language of tokens and airdrops better than the suits on Wall Street. On the other hand, if you are managing your wealth through Fidelity, the vibe is different. Fidelity investments usually attract a crowd looking for stability. A Fidelity brokerage client looking at their Fidelity mobile app might see a warning label on a stock like DVLT because of its volatility and small market cap. Fidelity wealth management advisors would likely tell you to stay away from something this speculative and stick to Fidelity mutual funds or Fidelity ETFs. Yet, even within the conservative ecosystem of Fidelity, there are aggressive traders who use their Fidelity trading platform to allocate a small casino portion of their portfolio to plays exactly like this. It is crucial to understand that Datavault AI is not just a shell company throwing around buzzwords. Their business model is centered on the concept that data is an asset class, specifically that your data or a company's data has a measurable financial value that can be put on a balance sheet. They call it the data quarterback model. They use their patented technologies, data score and data value, to assess the quality and monetary worth of data sets. Think of it like a credit score, but for data. In a world where AI models are hungry for clean, verified, high-quality data, Datavault claims to provide the infrastructure to secure and monetize that data. This is where the Tesla stock or NVIDIA stock comparison comes in. We all know NVIDIA creates the chips that power AI, and Tesla collects massive amounts of driving data. But who values that data? Who facilitates the exchange of that data between companies securely? That's the gap Datavault wants to fill. While Tesla stock and NVIDIA stock are the titans of hardware and application, DVLT wants to be the accountant and the bank for the raw material, the data itself. However, the recent price action suggests the market is skeptical about their ability to execute. Trading at 1.38 USD puts the company's market cap in a dangerous zone where volatility is the only constant. If you're using Interactive Brokers, you're likely looking at the Level 2 data and seeing massive walls of resistance. Interactive Brokers trading platforms often attract sophisticated active traders who are shorting stocks like DVLT, betting that the cash burn will force the company to issue more shares, diluting existing holders. The Interactive Brokers fees for borrowing stock to short might be high, but the bears are betting the price will collapse under the weight of its own ambition. Conversely, the bulls on SoFi Invest are chatting in forums about the potential for a massive short squeeze if the meme coin dividend actually gains traction. SoFi investing tools and the SoFi trading platform have become a hub for younger investors who are comfortable with this blend of tech and pop culture. They see 1.38 USD not as a risk, but an asymmetrical bet. You can only lose 1.38, but if it goes to $7, you make 5 times your money. Speaking of $7, that's not a number I just pulled out of thin air. Analyst coverage on this stock, albeit limited, has thrown around price targets significantly higher than current levels, with some consensus figures hovering above the $7 mark. That represents a potential upside of over 400%. Why such a disconnect? It comes down to the IBM partnership. Datavault recently announced they're embedding IBM's WatsonX.ai into their platform. This is a stamp of legitimacy. It means they're not just building software in a garage, they're leveraging one of the most powerful AI engines in the world to power their data valuation agents. When a micro-cap company secures a partnership with a giant like IBM, it usually provides a floor of credibility. Yet the stock is down. Why? Because we are in December 2025, and the broader AI trade is showing signs of fatigue. We just saw Time magazine named the AI architects as Person of the Year, and historically, that kind of mainstream attention often signals a local top, the so-called magazine cover curse. Investors are worried that the easy money in AI has been made, and now we're in the show me the money phase. Let's pause for a second. I want to hear from you on this specific point. Comment below with your take. Do you think the meme coin dividend is a brilliant marketing strategy to engage retail investors, or is it a desperate red flag that the company is trying to distract from its financials? I really want to know if you would hold a stock just to get a crypto token airdrop. Now, back to the analysis. The meme coin distribution is set for December 25th, 2025. This date is critical. It acts as a catalyst. Anyone who wants that token needs to be a shareholder on the record date. Often we see stocks run up in price leading into a dividend date as traders buy in to qualify and then dump the stock immediately after. This dividend capture strategy is common with cash dividends, but with a digital token, the psychology is different. If the market believes the token itself will have value,